Hello, people. Well, Neo just released the Q2 results, and I just finished listening to the earning call, which was very, very long, it's over an hour and a half. And of course, when I left, the stock was down something like 4% or whatever. The thing is, I thought it's necessary to make a quick video and basically just chat as to overall, first take at this, and probably we'll have to make a more detailed video on it. The overall picture is that the total revenue was down, the vehicle revenue was down, the vehicle margin was down, the gross margin was down. I mean, everything was down, right? Um, and the R&D was a little bit higher than what I thought would be. The selling general was the only shiny spot, which was less than what I expected. And but then the earning per share adjusted was 25 cents, which a loss of 25 cents, which was really beautiful to see. So we have lower this, lower that, whatever, and then in the end we have lower losses. And to be honest with you, I would rather and I see lower revenue and lower losses than higher revenue and higher losses. I mean, we do not the main thing we should be looking forward for are the losses. We just don't want to see big losses, okay? And the other surprise was the cash. Cash was 3.8 billion when the cash from the previous quarter was 3.6. So even with all these losses, we had higher cash, more cash. Part of it is because of the Hong Kong offering. You have to go back to the other video and see that. But so how do we look at the whole situation? Well, I actually think that the reason why we have this discrepancy between say my numbers, and this is not just to justify anything, we have to learn from this, right, is actually the vehicle margin. If you take the vehicle margin, I thought it would be around 13%. If you take the vehicle margin difference, which is 3%, and you multiply that by the vehicle revenue, you would come to about 67, 68 million dollars. And if you look at the difference in the revenue between the overall revenue, total revenue, you would find it to be 70 million dollars. So the vehicle margin alone would have compensated, basically would have settled all the numbers. Okay, so it was a surprise to see lower vehicle margins, and that tells you the intensity of the competition in China. But yet, for some reason, somehow, magically, Neo is doing wonderful. I mean, really, I can't tell you how thrilled I was to see the results. Of course, not to see the stock going down, but to see the results for many reasons. Number one is that Neo is found a way to control the losses with with even lower vehicle revenue and lower vehicle margins and gross margins. I mean, that is actually pretty nice to see, right? The second thing is that the future looks really interesting and looks stable. For Q3, the assessment. Sorry, there's a you have bees here actually. The or wasps. The assessment was 87 to 91,000, and that was higher than what I thought, 86. That was good to see. And also Q4, Neo is looking at 150,000 vehicles, and so you can see this huge jump. So the big surprise will be in Q4. Okay, and so we've been waiting all year long to see that Q4 would assess to almost half of the entire annual deliveries. Okay, so why is this good? Well, it settles the argument that Neo would deliver 440,000, even though I thought that they can still do it. Okay, but I think the Firefly, to be honest with you, was a disappointment. But in any case, this is what it is. Now we have a new base of 350,000 roughly, right? We know what Q3 should look like. We know what Q4 should look like. And NIO is aiming for higher margins. So when you look at the overall picture, I think there is a stability and things are looking great for NIO. And that is the difference. In fact, if you look at NIO's delivery growth for Q3, it is over 40%, 43% compared to Q3 of 2024. So NIO will grow in Q3 43% compared to last year. At the same time, Li Auto will have a 40% drop from last year, and yet, if you need to find a safe haven for your investment, you should go to Li Auto. And okay, so if you don't like NIO, there's always a Li Auto you can invest your money in. Okay, I know I'm being facetious, but this shows you the magic of manipulation. The magic of manipulation can make the ugly looks beautiful and the tall looks short and the short looks, I mean, you name it. You could just pick and choose anything you want to say and it will be fine. Okay, now it is what it is. I think this is it's good news for retail investors. Good news, because this settles a lot of things in this quarter. Okay, so anyways, we probably have to discuss this in more details and see where we missed some of our numbers. But overall, I actually like these numbers better than if they met my numbers. All right. Anyways, never financial advice. Please do your research and due diligence. Thank you. Bye-bye.